IPO mania. Are you buying the high or the real value? Hey there, welcome back to Money with Param, the podcast where we talk about money like we are having chai together. Simple, clear, no finance degree needed. Today's episode is all about something that's got a lot of people excited and a few folks a bit nervous. IPO, initial public offerings. You see them all over the news. XYZ company raised 4,000 crore in minutes. But here's the big question. Are we buying the hype or the real value? Let's break this down like we are talking with a friend who's about to click buy on that hot new IPO app pop up. What's an IPO? In simple words. So when a company says we are going public, it means they are selling a piece of their business to regular investors like you and me. That first time a company shares go public is called an IPO. Sounds good, right? You get in early, the stock goes up, and boom, you're rich. Well, not so fast. Let's talk about what's really going on. Why are we seeing so many IPO right now? In 2023 and now 2024 to 25, there's been a crazy boom in IPO. Why? A few reasons. Stock markets are doing well, especially in India, hitting all-time high. Companies see this as a chance to cash out. Founders, early investors want to exit at high prices. Retail investors like us are super active thanks to easy apps and social media buzz. But here's the twist. Not all IPOs are created equal. Some are gems, some just shiny rocks. Where people go wrong. Let's be honest. We have all been there. You see Instagram reels and tweets. XYZ IPO gave 120% return on listing day. Hot IPO oversubscribed 40 times. So what happens? We, FO, MO, we apply without reading single line about the company. And that's where things go wrong. Because here what often happens. The stock list high because of hype, then crashes when people realize there's not enough real business behind it. Want an example? Think PTM, mega hype, mega listing, but now is still trying to recover years later. How do you know if an IPO has real value? Here are three simple checks. Anyone, even if you're not a finance expert, you can do. Is the company making profit? If yes, great. If not, ask when will it make money? Don't just trust growth strategies. Who's selling the shares? If the founders are selling big chunks, it could mean they want to exit. That's a red flag. What's the price compared to existing players? If the IPO price is way higher than companies already listed in that sector, pause. Also, read the red herring prospectus. Just skim key parts. It's boring, yes, but it tells you the truth behind the flashy marketing. You want to check Param rules of IPO? Here's my personal rule. You can write this down. If everyone is shouting about an IPO, I sit back and whisper, let me wait. You don't have to chase every IPO. Sometimes real value comes 6 months later when the noise dies down and prices settle. Even Warren Buffett doesn't invest in IPO. Why? Because he says if a business is really good, it still be good after the IPO. What you can do now? Next time you see a hot IPO, look at the profit or loss history. See who's selling. promoters, or just the company. Compare the pricing to others in the market and ask, am I investing or am I just gambling on hype? If you are unsure, no harm in skipping. There's always another opportunity. The market doesn't shut down tomorrow, right, guys? Let's wrap up again, guys. So, that's your simple guide to the IPO frenzy. Some IPO will make people rich, some will make people regret. Let's make sure you stay on the smart side of the line. If you like this episode, share it with one friend who's about to jump into an IPO. And don't forget to grab the Beginner Investor Toolkit free download link in the show notes. Until next time, I am Param reminding you to invest with brains, not just buzz. Take care and keep it simple.